on recent information. 1. Global market cues. Asian markets. As of early Monday morning, Asian markets were largely trading higher. Japan's Nikkei 225 and Topix showed gains, as did South Korea's Kospi and Kosdaq. This generally positive sentiment in Asia can provide a favorable start for Indian markets. Wall Street. U.S. stock markets ended lower on Friday, with the Dow Jones, S&P 500, and Nasdaq all closing in the red. This was influenced by renewed trade tensions. The choppy performance in U.S. markets could introduce some caution. U.S. Treasury yields. 30-year U.S. bond yields had reached their highest in 19 months before easing slightly, reflecting concerns about the U.S. fiscal outlook. Rising U.S. bond yields can lead to foreign portfolio outflows from emerging markets like India. Crude oil prices. Crude oil prices edged higher on Monday morning. Geopolitical tensions. Ongoing geopolitical events, like the Russia-Ukraine war, can weigh on global sentiment and impact markets. 2. Domestic market cues. GIFT Nifty, formerly SGX Nifty. GIFT Nifty is a key indicator for the Indian market's opening. As of early Monday morning, GIFT Nifty was trading at a premium to the Nifty future's previous close, indicating a mildly positive start for Indian indices. For example, one source indicated GIFT Nifty was trading around 24,920, a premium of nearly 40 points, suggesting a positive opening. Note: the SGX Nifty contracts have been shifted to the NSE IFSC in GIFT City, Gujarat, and are now known as GIFT Nifty. It trades for 21 hours daily, providing an early indication of market sentiment. Foreign institutional investors, FII, and domestic institutional investors, DII, activity. On May 23, foreign investors, FIIs, were net buyers, pumping in a significant amount into Indian equities. Domestic institutional investors, DIIs, continued to be steady buyers. FII flows are a crucial factor, and recent outflows due to rising U.S. bond yields have put pressure on emerging markets, including India. Economic data. Upcoming key macroeconomic data releases in India include industrial and manufacturing production data for April, scheduled for May 28, and Q4 FY25 and FY25 GDP growth figures on May 30. These will offer insights into India's economic recovery. Morgan Stanley recently upgraded its forecast for India's economic growth. RBI dividend. The Reserve Bank of India, RBI, has decided to transfer a record 2.69 lakh rupees crore as surplus to the government for FY25, which is a substantial payout and can be seen as a positive for government finances. Corporate earnings. The performance of corporate earnings is a major driver of investor confidence. Government policies and RBI monetary policy. Changes in government policies and RBI's monetary policy decisions, like interest rate adjustments, significantly influence market liquidity and performance. Overall outlook.